I'm finally connected and ready. Is your journal and posting all on the same page or real close? Is it all really handy for you right there? Okay. We're going to do the laundry daily. And do you know what I mean when I say that? We're going to post every transaction. Okay? I could wait and do it all at the end, but just like when you wait to do laundry on weekends, it's not nearly as fun, if laundry ever can be fun. So remember, when it comes to journal, I want you to put journal and say 5 steps. Okay? I feel like I've been just jamming these 5 steps just at you daily, and so I'm going to hold off and just give you some key points, and we're just going to start. When you get to your ledgers, I'm going to show you all of them. I don't look at the answers, so to speak, but let's mark them up first. Cash is an asset. Equipment is an asset. A payable is a liability, and owner's capital is OE, one of the good ones. Is that the only ones you have? Okay, you have drawing? Okay. I'll scroll down to get that. Remember, ledgers are that's been sucked out of the general journal and posted to these individual little stories. What order are they in? They're in order of the balance sheet first, assets, liabilities, owner's equity, and then they'd go into, we don't have this one, then we'd go into the revenue and then expenses for income statements. All right, so any asset is a normal debit balance, so the debit's the increase, the credit's the decrease. As we go to the other side of ALLO, so we go to the right side of the T, that becomes a credit is the normal balance side, so the credit's the plus, the debit's the minus. Okay, I'm going to scroll so I can get at the bottom one. Owner's capital, since it's on the right side and one of the play-by-the-rule accounts, that's the credit increase with the debit decrease. Now, owner's drawing is also OE, but it's one of the naughty accounts. Think of it like an asset's cousin. Although it's on the right side of the T, it doesn't follow the right side or credit rules. It follows debit rules. Why? Because if you would credit something on the right side, it would make it go up. And if the owner is taking money out, it's got to be flipped. Okay? That simple act, I hope, helps. It should. All right, first things first, let's do our first transaction. Remember, every transaction is going to have at least one debit and one credit. Could it be more? Yes, we'll get more into that in the problems. First one, September 1st, we invested $10,000 cash in the business. Okay. I don't want to even say what increased, what decreased, because they both increased. What's our debit? Tell me why it's cash. It's going up. What's our credit? Owner's capital. So we're going to date it September 1st. Are they dated for you already? Figured that. Okay. Cash. You don't have to put the ... That's what are called leaders. We had a $10,000 debit. We had a $10,000 credit. Remember, typically you're indenting the credits just to give it a visual difference. It might say omit explanations, but we're going to put them in anyway. Owner invests cash. You could put whatever you want there. Did it give you a line to put an explanation? Good. So step 1 was date. Step 2 was debit. Step 3 was credit. Step 4 was explain. What's step 5? Reference number. Well, we've got to go post. We're going to go do the debit first. So we're going to go find cash. And go ahead and list the date, September 1st. As of now, we're not explaining anything. What does J1 mean? Journal page 1. We had a debit of $10,000. I'm going to look above and say plus what? What was the balance before? Nothing. So $10,000 plus nothing is $10,000. 101. What are we going to do with that 101? We're going to bring it back to that post reference. I'm going to skip flopping just so we can be more productive here. Okay, I see a debit. We also had a credit. We had a credit to owner's capital. Looks like I'm going to have to just sit here because my stuff needs scrolling. We had a debit or credit to owner's capital, still on September 1, still pulling from J1 as a reference. We had nothing in the balance, so 0 and then plus 10,000 is 10,000. We'll take that 301 and then bring it back for the posting. So now do you see holistically how this works? We journal, and then post, and then come back and tell the rest of the story. Let's move on to the next one. This is a good one. I'm glad we're getting. What kind of entry is this? It's not a simple entry. It starts with C. Compound entry, where you have 3 or more accounts impacted. 1 debit, 2 credit, 2 debits, 1 credit. In this case, and I don't have the book in front of me, could someone read the transaction in the book? Perfect. Thank you, Jenna. So we purchased $12,000 worth of equipment. We see an asset go up. I'd say that one of 3 things can happen at this point. You could pay for all of this equipment using what? Cash, or you could charge it, or what we're about to do is a combination of both. We're going to put some money down. So we put $4,000 down. Whoa, wait a minute. I'm going to see an asset go down. That's kind of a bad thing, isn't it? Well, no, because sometimes you got to use an asset to get an asset. And in this case, we put $4,000 down. When we owe money to someone, what account is it? Accounts payable. Do you think on a test, if you switched you 2 credits, I'd still give you credit? Yes. On a test, let's say you listed AP first and then cash. So if you flapped your 2 credits around, yes, I'd be fine with that. Okay, so now we need to suck those 3 things out, 1 debit, 2 credits. And what's the process called of moving it from the journal over to the ledger? What's that called? Starts with P. Posting. So we're going to go ahead and post those 3 things. I'll start with equipment. I see a debit increasing by $12,000. We used a little bit of cash to pay for that. Now you get to see the cash story unfold a little bit. You would have had to wade through that journal to figure it out, but right now you can see that on September 1 you put $10,000 into the business. On September 5 we're taking $4,000 out. Because there's a balance in that, or because there's a number in that balance column, we have to look and see, okay, 4,000 minus the balance. So we have an updated balance of $6,000. The last thing that we have to document is that other credit. We now owe someone $8,000. Soon and very soon, you're going to just know that a credit in AP is pretty normal, AP is normal. But for now, I like pluses and minuses, and I would assume you would agree. Good. Take all of those account numbers and make sure they get back to the reference column of your journal. Next transaction. Oh, did you put the little explanation down here, I hope? I would hope you did. It's better for me to sit here instead of write because otherwise I'd have to pop back and forth. Looks like 20 days later, we made a payment on what we owed. Shame on us though, what didn't we do? We didn't all pay it in full, but you know what? We paid some, which is better than nothing. So you're going to see, and this would be an example of, okay, I'm not sure the debit here. I know cash is going out. So I know cash has to be the credit. I got to search for the debit. But just be careful that you still list your credit first. Can you tell from a test perspective, a problem like this is a points hog? Why do I say that? There's a lot of stuff. I see a date, I see a debit account, I see a credit account, I see a debit number, I see a credit number, and I see 2 post references. You guys, that's 7 points right there. All right, so back to this. We've got to post this. Okay, so now again, you start seeing the accounts payable story become real. It had an $8,000 balance minus what we paid to update and show that we still owe $5,000. What would we be doing with that 201 number? Would we be bringing it back to the post reference column? Are you glad this is all on one page? It's really annoying when you have to flop between pages. You, of course, used cash to pay for that bill, so you're going to see cash go down. $6,000 balance minus the $3,000 that you owed, or excuse me, what you paid, brings that balance to $3,000. Taking that 101 back to the journal. Do we have one more to do? Yes. Okay, you'll notice my answer key doesn't put in the explanations. Are you putting them in? Okay, thank you. So on the last one, we're going to see the owner take money out of the business. How is that one worded? Could someone read that one? Okay, who did? The owner. Okay, so you're going to see cash go down. What's the debit? I see a cash credit. Something's got to be a debit. Well, owner's drawing. And that's not gaining an asset. It's actually a hit against owner's equity. Okay, so then we'd go journalize all that. Rarely will you see a credit in owner's drawing. It's not like the owner's like, ooh, I guess I want to give that money back to the business. You don't typically see that. So you'll typically see owner's capital credits and owner's drawing debits. And then, of course, your updated balance on cash ends up being $2,300. Bringing those 2 numbers back to the post-reference column of your journal. I have a feeling today it clicked for some of you. Today you're like, okay, I get this now, because the book was a little bit putsy and it would show you one side of it but not the other. And now you get to see it holistically. Okay. Tomorrow's lesson is actually going to be really, really easy. Tomorrow it talks about, okay, you've journalized, you've posted to all the individual accounts. Now you create from this what's called a trial balance, just as a checkpoint to make sure your debits equal your credits. And you take things like all of these balances that are hanging here all the way down, and you just put them into, it's not a formal financial statement, it's just kind of a tool. And you list your debits, you list your credits, and make sure they equal. So that's tomorrow. Pretty easy. Okay. There is one more thing I'd like you to do, and obviously we're ahead of schedule, but 4 of you are going to leave us, so it actually worked out okay. I would like you to do exercise 2.8. It's just a true-false thing, and I think it wants you to correct the false answers. Crank through those, and then I'll talk through them as soon as you've provided some answers. So exercise 2.8. In the book, but not in the workbook. Prepared the following list of statements. Identify if they're true or false. If they're false, please correct them. So a couple of true-false statements, trying to decide what's true and what's false. The first one, the general ledger contains all asset and liability accounts, but no owner's equity accounts. That, of course, would be false. The general ledger includes all of them in order of asset, liability, owner's equity, then revenue, expenses. Okay, so they're in order beginning with the balance sheet through the income statement. And if you remember, assets are 100s, liabilities are 200s, 300s, 400s, 500s. Typically, if it's a large business, it might be 1,000s, 2,000s. What's the best suggestion as new accounts are added? You go in increments of 10. That way you've got 9 numbers in between to use as new accounts get added. The second one, the general ledger is sometimes simply referred to as the ledger. That's true. The reason the book is introducing general journal and general ledger to you, later you're going to have more than one. You're going to have 5 journals and you're going to have 3 ledgers. And so referencing things as general now is going to help you later. Number 3, the accounts in the general ledger are arranged in alphabetic order. We already talked about that, but basically it's in financial statement order. First the assets, then the liabilities, then the capital, drawings, revenue, expenses in there as well. Number 4, each account in the general ledger is numbered for easier identification. Yes, and we're talking increments of 10 typically. Finally, the last one, the general ledger is a book of original entry. The reason that's false is because the general journal is the original book of entry. And then we post to the ledger.